Hi guys, let's talk about Coinbase. It's a company that provides financial infrastructure and technology for the cryptocurrency economy. It's basically cryptocurrency exchange platform that has already pretty big market cap, almost 60 billion. And yeah, there's a lot of risks and a lot of good thing and good forecast for the stock. Full information should not consider investment advice. The simple Wall Street rewards by earnings are forecasted to grow over 26% per year, and it became profitable this year. And shares are highly illiquid. Also, the entered index, and there's not of a lot of information of the stock. I mean the history, so we don't see here 7-day returns or anything like that. And the valuation side, we see here tip ranks showing that stock predictions could be the around $536 per share. So there's currently 56% upside, and in good scenarios, there's a stock forecast for 12-month forecast $650 per share in good scenarios. In bad scenarios, still upside $394 per share. So says the market watch that have pretty much the similar price targets and average $520 per share in good scenarios $650 per share. So this actually could double itself in 12 months. And yeah, simple simple Wall Street have something wrong with it because the valuation side we saw it there. Yes, fair valuation. I'm not sure. I think it counts the fundamentals and so on, the balance sheet, and yeah, it thinks that the stock price is over evaluated by 10,000%. So this actually the simple Wall Street is more accurate on like high quality stocks that have big balance sheets and so on. Future growth 26% forecast annual earning growth, which is pretty good for the company. On this industry, earnings per share is forecasted also to grow, and yeah, it's currently profitable and it's forecasted to become even more profitable over the future years. Past performance, last earning revenue growth, hugely 143%, which is pretty nice, and it has high quality earnings. Financial health side, yes, we see here that there's a little depth, but debt to equity ratio is on a satisfactory level. Cash and in equivalence 1 billion of cash, equity 1.5 billion, and debt 271 million. And as you can see, balance sheet, there's a not so big line of the red. There's the liabilities, and yeah, of course they're not paying dividends and the insider volume, so there's currently no volumes. And also we see here that the ownership breakdown, individual insiders holding 53%, institutions 46%, and I think top shareholders we see here 1st of April, so that was before the IPO, and actually we don't see here the actual ownership breakdown because there's not general public included, and also for example private companies and so on. But anyway, simple safe dividend shows that the shares outstanding was 91 million. The latest I saw, I think it's fresh data, I think it's about 131 million of the shares that outstand currently. Anyway, there's like max 1 week the stock is on the market, and that's why we don't have here so many data on, but I think in the future we could analyze this more and predict more maybe the stock price, because the cryptocurrency is not so regulated as it wanted to be, but it's going on the right direction, and maybe it will be brighter future on the cryptocurrency in like the regulation levels. Yeah, we see here April 14th, it was highest point of the day was 429.54, the lowest 310. So it's pretty much in these lines I think what trade by, so 300 to 400. So if it moves more, then it could reach those points that I mentioned, $536 per share or even more. But I'm not sure it breaks down to under 300, because yeah, there's a huge volume going on, and yeah, I think it could be pretty volatile, because as you can see in one trade day, 300 to 400, so it's pretty huge. And yeah, for me it's too risky, but I think there's a lot of people who can profit of it. And investing.com summers for long-term investors as a neutral by moving average neutral and technical indicators by. For me, it's still, I like to invest in long-term companies, high-quality companies that paying dividends for years and have been increased even in market crash and so on. And if you're like want to investing in some of the volatile share price or in cryptocurrency and so on, I recommend max of the portfolio could be like 1%. It's not so painful to watch then. So if the portfolio goes up and one of the stocks that you invested in like short term risky, it could be so painful. And by the way, if you enter like at the 400 something level, it drops down like minus 30%, then it's painful, and that's something that I'm not recommend. And yeah, be patient, be like calculative, diversify by time, by industry, because there's much of going on. So this pretty much of this recommend the S&P 500. So, and diversify by industry. And yeah, so you can buy the Visa, JP Morgan, Johnson and Johnson. So there's a lot of industries, a lot of sectors, some of the insurance companies, healthcare, communication services, internet retail, discount stores, and so on. That will help to at least not losing the money. And then, as you can see, the 1 week performance pretty much all green. If it goes red, you at least have, I think I should recommend to have some cash if the market goes in corrections or in the crash. You could buy some more of the stock that could possibly gain more returns in the future. Thanks for watching this video, subscribe to the channel, like the video, and see you in a future one.